Okay, here is my complete checklist to becoming a profitable trader. Now, this consists of 4 major steps that you need to follow. And if you are able to follow these to a T, then you will be a profitable trader. And of course, I'm going to be using a live example as I explain this to you as well, just so you guys know that I'm not going back and showing you previous price action to try to make it seem like I took a trade that I didn't really take. This was a setup that I posted in advance inside of the Pro Discord. It's still currently running, and this followed my trading strategy to a T. So again, this is the 4-step checklist to becoming a profitable trader. Let's jump into it. Okay, number 1 on the checklist, you want to make sure that structure is either bullish or bearish. So in this scenario, I did structure bullish. Now this is very, very simple to identify, okay? A lot of people will say, do a top-down analysis from the weekly to the daily to the 4-hour. I only use a 4-hour. So go to the 4-hour time frame and make note of the market structure, right? Is price making higher highs and higher lows? Is it making lower lows and lower highs, or is it ranging, right? A ranging market, you don't want to use this strategy. You want to use swing failure patterns. It's a little bit different. But in this case, I saw that structure was clearly bullish, okay? It's not very difficult to see what structure is, okay? People make it more difficult than it actually is. When price is here, you can see that we had created a bias flip to the upside after price closed above this level. So a bias flip is another word for shift in structure. So you can see that in this downtrend, right? In this downtrend, we are seeing lower lows and lower highs, right? Lower lows and lower highs. And these lower highs are protected, right? Protected, meaning that price does not come back up to any of these highs, right? Price does not come back up to any of these highs to close above until this level, right? Up until this level, after we had closed above with displacement, meaning a strong bullish move above this previous high, we had created a bias flip, meaning for the first time in this general downtrend here, we had seen price start to create a higher high. So we have a lower low, then we have a lower high, and then a higher low, and then we have kind of like an equal high here, and then again an equal low here, and then here we see finally that higher high. So now we can anticipate a higher low, which is where we are trying to enter the trade, right? So that's step number 1. And in parentheses, I'll put 4-hour time frame, anywhere from the 4-hour to the daily. But again, you're just looking at what structure is doing. Okay, number 2 on the checklist, find a key level with price history. Now it's very important that when you're looking for horizontal levels, right, support and resistance levels, you're finding levels with price history. This is an area that has been respected well in the past. This is what we refer to as an area of interest. So it's not just any support or resistance level. It is a key level that has been tested before in the past. So if we take big time here, I can see that the zone I had marked out, if we look left, always remember to look left, had acted as support with this long wick down here. And then if we look towards recent price action, it was acting as support once again. We failed this level, acted as resistance, 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 and then we had closed above this level without really retesting. So if we get another test of this level, we will look to test this level as support once again. So very simple. Again, key levels are very easy to understand. I just made a video talking about how to identify key levels for yourself. And the great thing about trading key levels, right, key horizontal levels, not only is it textbook classical charting that has been used for decades and decades and decades, it just makes sense in your head, right? If price has respected from a certain level or zone multiple times in the past, odds are if we test this level again, we will see a reaction, okay? So that is number 2 on the checklist. Make sure that the levels have price history. It will take a little bit of time to identify these levels for yourself, which is why I've developed the Easy Algo trading indicators. You can click the first link in the description below. Even if you don't have the indicators, it's still good to draw these levels out for yourself. You never want to rely on a certain indicator or a certain person to become profitable. You guys want to learn how to do it yourselves. Okay, number 3 on the checklist is a fib confluence. Now, I like to use the golden pocket fib. So let me put this in parentheses, okay? The golden pocket fib, which is the 0.618 and the 0.65 Fibonacci retracement tool, as you can see here. So this is just the standard Fibonacci retracement tool. If you press Alt F on your keyboard, right, you can draw it from the swing low to the swing high, right? Draw it from the swing low down here. This is the most recent swing low to the swing high for a long position, or you can draw it from the swing high to the swing short for a short position. Now, you never want to enter off of the golden pocket fib alone. You want to make sure that you have the first 2 bullet points in the checklist down first, right? You want to make sure that structure is bullish, and then you want to make sure that you have a key level with price history overlapping that level. So what you're looking for here with the golden pocket fib is overlapping of the fib with the key level, right? You want to see confluence here. This is what we refer to as confluence, right? The more number of confluences that you have, the higher the probability of a trade. You know, a lot of people ask, Matt, what makes a high probability trade? There is no definitive answer to what makes a trade a high probability trade other than the number of confluences. The more confluences you have at a certain level or zone telling you that this is an area of interest, the higher the probability price will react from that level or zone. So again, we're looking for an overlapping of the fib and that key level, which we can see here. So now we have a pretty confident thesis, right? We have a lot of confluence here. We have that key level, the golden pocket fib. We had just seen that bias flip to the upside. So now if we get a retrace, we are looking too long at this area, but we don't just want to enter via a limit order. If you're an experienced trader, you can do that, right? But for a majority of you guys, I'd recommend going to a lower time frame for entry, which is number 4 on the checklist. Number 4, divergences on a lower time frame for entry. So as price is approaching the zone that we've marked out with the golden pocket fib, the key level, right? We want to look for, in this case, bullish divergences going down to a lower time frame. So I'm going to get out of replay mode here, and we're going to go down to a lower time frame. So you can see this trade was a really good example. So what I like to do is go down to a 1 hour, a 15 minute, and a 5 minute. This is called multi-time frame analysis. I want to see the oscillator down here showing me the same thing across multiple different time frames for the maximum amount of confluence. Now, if you're wondering what oscillator I'm using and which oscillator I'd recommend, I recommend using the Easy Oscillator. Okay, this is my own custom oscillator. You can click the first link in the description below. We have these real-time buy and sell dots, bullish and bearish divergences, overbought and oversold zones, as well as volume. Now, if you don't want to get our premium indicators, you can use Fu Manchu Cipher B, which is a free alternative. Although the divergences lag a little bit and it's not real time, it's still a pretty decent alternative. But again, the Easy Oscillator is the best in the game. I know I'm a little bit biased, but I could not trade without the Easy Oscillator. So again, we want to go down to a 1 hour time frame, right? As price is approaching this zone, even a 4 hour, you can go down to a 4 hour, 1 hour, 15 minute. And what we want to see are these bullish divergences, right? We want to see these bullish divergences. So we can see here on the 4 hour, we had a buy dot. Price did not tap into our golden pocket yet. So I always wait for at least the golden pocket to get tagged into. Some people enter before the golden pocket at the 0.5 fib. I don't do that. My rules, the rules that I follow, that I've been following for years, is I only enter once price taps in or below the golden pocket, so the 618 and the 65 fib. So we can see at this point, we have a buy dot, and we can anticipate, right, that bullish divergence. So a divergence is a discrepancy in momentum and price. So for example, if price is making a lower low as momentum is making a higher low, that is a discrepancy in price and momentum, right? They're doing the opposite, which tells us that bullish buying pressure, bullish momentum is strong, and that although we're making a lower low, we can expect a push up from the bulls. And then obviously vice versa for a short position, right? If price is making a higher high and momentum is making a lower high, we can see that that is a clear discrepancy in price and momentum, and we can expect price to continue to the downside, even though we had made that higher high. So this was a clear bullish divergence, as you can see, right? Price made a lower low as momentum made a higher low, but we want to go down to a lower time frame as well, right? Go down to a 1 hour time frame, and we can see as soon as price enters into this key fib zone, into our key level, we get an immediate reaction. We have some bullish divergences here on the oscillator. If you want to go down to an even lower time frame to really pinpoint that entry, you could also go down to like a 15-minute time frame, and you can see here, right, more bullish divergences. So you would enter the trade somewhere around here. Because we're going down to a lower time frame, we can get those really high risk to reward trades, right? So put the stop loss below the low, somewhere around there. And then we want to target the external liquidity, which in this case is this high all the way up here for and check out this risk to reward, guys, right? 15 risk to rewards. We're risking 100 to make 1500. We're risking 1000 to make 15,000. In this case, if I'm being honest, I had my stop loss a little bit looser because I entered on a 4 hour time frame. So my trade thesis was like this. So around a 6 risk to reward, I'd already taken majority of the profits here. I actually fully closed this trade, but a lot of our members are still letting this one ride. This is the 4-step checklist to becoming a profitable trader. Okay, there are a lot of people that would literally charge money for this information, try to sell you something for this information. But this is all you need to know. Okay, if you can do these, if you identify the structure, if you find your key levels with price history, if you have your key fib confluence, and go down to a lower time frame for those divergences to enter a trade. And you stick with this using good risk management, risking 3% of your total portfolio per trade with stop out included. And you consistently enter trades using these rules. I can guarantee you will be a profitable trader. Now, if you guys want to get mentored by me directly and you guys want the indicators that I use, again, make sure to click the first link in the description below. We have so much value in there. I post all these setups in advance so you guys can get in with me. Make sure to leave a like if you enjoyed the video, and I'll see you guys next time.